Hey guys, Mike here. So obviously another red day in the market, another very volatile day in the market, and of course, Jerome Powell, our buddy's up there testifying in front of the Senate, and giving his same, I hate to say this, but just BS answers, same kind of answers that put a lot of instability in the market or contributes to it. Because once again, I showed you last month multiple times he was asked, you got a plan here, and he's like, nope. And of course this time, same stuff. Where it's like, no, we don't have a plan. We're going to do our interest rate hike in March, and then we'll see what kind of interest rate hikes we're going to do after that. We don't have any plan for the balance sheet yet. We're probably going to run it off, might not run it off. We have to go off the data, right? And then he says something, it was just ridiculous about, when he's asked about what about going on with Ukraine and Russia and how that's driving prices up. And, I'm going to show you his response starting right out of the gate. And then one of the other Fed chairmen, who's more hawkish, comes out today on the news as well, and she says what she has to say, which is kind of total opposite of what he said, right? So that's more uncertainty thrown in there. And then at the end, I love it. I love it when people serving in either as Congress or a Fed chairman get called out, and like finally somebody calls him out, right, and just says what I think a lot of us have been thinking. And so I ended on a high note. I got a good chuckle out of it, and I was like, yes, a good fist bump. Say finally. I don't even know who the senator is. But, obviously you can tell by his age, he's probably been up there for years. And so he has no problem doing it. And so if you're getting out of it, hit the like and subscribe button for me, guys. I really appreciate that. Hit all the notifications, hit all. And so let's go ahead and get into it. He's asked about how they should handle dealing with inflation now that Russia has invaded Ukraine. Keep in mind, prices are skyrocketing on oil, natural gas, fertilizer, all kinds of stuff. That's going to affect the food supply. That's going to affect food prices. Keep that in mind, okay?
I would say in this very sensitive time at the moment, I think it's appropriate for us to be careful in the way we conduct policy, simply because things are so uncertain, and we don't want to add to that uncertainty. But that's where it leaves me.
And this is why they took off the 50 basis points, right, on the first rate hike this month, because of that. Even though you're looking at this going, wait a minute, shouldn't you be more aggressive? Because now the prices are going higher than ever because of the conflict. And, to drive my point home, here's what the other Fed chairman had to, I'm sorry, not the Fed chairman, but the Fed president had to say.
The situation in Ukraine certainly adds uncertainty to the economic outlook. Of course, our first thoughts have to be with the Ukrainian people who are having to deal with a tragic situation. But the uncertainty about the economic outlook doesn't change the need to get inflation under control in the U.S. And in fact, it actually adds upside risk that high inflation might continue, and that makes it even more important to take actions, for the Fed to take the actions we can and do what we can with both our policy tools to control inflation. So, the potential here is that those large rises we're already seeing in energy and commodity prices, and potentially global supply chain issues continuing for longer, it really increases the risk of high inflation becoming embedded in the U.S. because it could lead to higher long-run inflation expectations. So that's why it's still critically important that the Fed does what it can with its policy tools to get inflation under control.
I mean, seriously, do you have to be an economist or even be on the Fed to understand that? I mean, that she's right on the money. This is actually causing more prices and instability in prices right now. And we're not over there fighting, right? I mean, and God knows how long this is going to go on for. Maybe it ends tomorrow, maybe it ends a month from now. Who knows? But it's just amazing to me to watch this man sit up there and just say, same old stuff. He's like, don't want to rock the boat. Don't want to rock the boat. No, 25 basis point. After that, we'll have to see how many rate hikes we'll do. And then maybe roll off the balance sheet. That was the plan. I don't know, though. We got to be nimble and quick and all this stuff. And I'm like, maybe if you'd have done something already, you wouldn't have to be nimble and quick, for God's sakes. I mean, that's the problem. And this senator who calls him out, which I'm fixing to show you, and this is what she's talking about. Look at these prices. I mean, here's oil, and this is American oil right here, sitting at 107, 108. It's been at 110, as a matter of fact. Look at this. Look at these charts. I mean, they're straight up. It's going parabolic right now. Natural gas was coming down, right? It's like, yay, Putin invades Ukraine. Oh, my God, here we go. And then you just look at in the last week, because that's how long, believe it or not, this conflict's actually been going on for. And, I mean, look at that. straight up we go. And then what happens? This messes up the fertilizer supply. Pandemic-induced supply bottlenecks and the rising cost of natural gas and production input are among the factors sending fertilizer prices soaring. And this came out 2 days ago. And food prices are already high enough. You know, it's not like this stuff, even if Russia left tomorrow and just said, we're going to pull out, which that ain't going to happen. But even if they just said that and everything went to peace, it's not like everything's going to go right back the way it was. And I understand with oil, the way these charts are looking, I mean, you know when something goes parabolic, anybody in crypto knows that. When stuff starts going parabolic, it can just moon, right? As they like to say. And if we get through 115, I think it is, I don't have the chart in front of me, but I think it's 115 is the key level. If we break through that, oh my goodness. I mean, then that's when people said, you can see 140 on the table. You can see it, right? I mean, and so I don't think people realize how bad that is if oil just goes parabolic and keeps going. If this thing just drags out and, God forbid, Putin try to actually, you know, retaliate by cutting off energy to the EU or anything, that's a whole nother problem. But it's like, it just amazes me to watch these prices keep going up and up. And every month since February last year, just going up and up and up and up and up. And there's old Jerome every month saying, you know, everything, we don't want to rock the boat or mess anything up, you know. And it's like, so that's why this senator right here calls them out for it.
Let's talk some more about price stability, because I think that's so important. We know what the term is, but to the average person, just explain what you mean by price stability, which is a mandate of the Congress gives the Fed.
So we think of price stability as having inflation that is 2%, right around 2%, but it may be a clearer way.
Stable prices, stable everything, right?
Yes, but really what it means is that people can go about their daily lives without thinking much about inflation. It comes down to that, and that it's just not an important consideration for people living their lives, taking out mortgages, putting their kids through school, or for businesses that are borrowing and things like that.
It affects everybody's in the economy, just about, doesn't it?
It does, and
one way or the other.
And when inflation goes up, you're seeing this now. Real wages, really, what matters is whether your wages are going up more or less than inflation. And for the most part, real wages are declining, but not for everybody. I think at the bottom end of the wage spectrum, real wages have actually been increasing. And that's why we need to get inflation under control.
It's going to be harder to get it under control once it's rampant than it would be when it starts out. My question to you is this. We know you have a lot of great, gifted economists at the Federal Reserve that furnish you data on every trend on prices and prices that would tend, dealing with inflation, price stability in the world, and how it affects us here, everybody. The Fed obviously missed the trends there. Was it a question of not having the right data, or was it a question of ignoring the data you had? Because a lot of private, I wouldn't say all, but a lot of private economists predicted where we're going on this inflation, and they were spot on 2 years ago. Was it a question of, again, you didn't have the data, which you should have, or you misjudged the data or ignored the data?
No, it was not about data at all. This is really what it was about. When inflation really just about barely a year ago, in March of last year, started to move up quickly, central banks and macroeconomists really overwhelmingly looked at that as like a supply shock, like an oil shock. And what the textbook says is the shock's going to come and it's going to go, and you shouldn't react to it. And so we looked at it that way. And I would say by the middle of last year, we started to move away from it, and we moved away from it at an increasing rate of speed. Hindsight says we should have moved earlier, and that turned out to be wrong. Not maybe conceptually wrong, but it's just taking so much longer for the supply side to heal than we thought. So in hindsight, you certainly wouldn't have done that, but I think we were there really is no precedent for this. We looked at it the way it was. There were certainly some voices, and they've turned out to be right so far. Ultimately, we think the supply side will improve, and that'll help with inflation. In the meantime, we're going to use our tools, and we're going to get this done.
Is the leadership at the Fed under you and the Fed prepared to do what it takes to get inflation under control and protect price stability?
Well, let me say I knew Paul Volcker. I'm pretty sure I saw him testify in this room many years ago. I think he was one of the great public servants of the era, the greatest economic public servant of the era. And I hope history will record that the answer to your question is yes.
So you're prepared to do what it takes without any reservation to protect price stability.
Yes.
That would be a departure of what you've done. Thank you very much.
I mean, hey, he's exactly right, though. Man, the prices are all over the place. They keep going up and up and up. And that where he said, well, we made a shift last year. You explain to me in the comments, where did he make a shift last year? Because he said transitory all the way to December of this year. They purchased, and they're still purchasing, bonds and mortgage-backed securities till March 10th. We still have zero on the Fed interest rate. So where did they make a shift? I missed the pivot. Where was the pivot? You know, and here's the thing. I would respect the man 100 times more if he just come out and said, I needed a second term. I needed a second term. And I needed you guys to put me in for the second term. Now, is that going to happen if I did what I was supposed to do last year and we take our medicine and the stock market doesn't set, 72 all-time highs or something last year, and he ended up costing all those senators and congressmen and representatives stuff millions of dollars? You think they're going to confirm him then? No, not a bit. But guess what? He knew that. So he kept that stock market pumping. He kept that liquidity in there, and he got his second term. There's no way he would have been confirmed for a second term if the stock market ends up going to the tubes and all their little returns on all the stocks I've showed you they're into, right, goes down the tubes. That's not going to happen. You ain't going to cost Nancy and all these other folks money up there, and they're going to confirm you for a second term, okay? And so I would respect him more if he said that. I would not like it, but I would just respect him more if he said that, you know, and that's just the way it is. I mean, this guy, you know, he keeps talking about he don't want to, you know, have any kind of basically cause any instability. That's all he does cause with his answers, because there's no plan in place, right? Now we finally know now, what is it, March 3rd now? On the 12 days from now, we'll definitely have a 25 basis hike, right? Because, oh my God, it's going to be 50 or 25. And isn't it just sad that we're up here sweating a 0.5% now, 0.5% increase in the Fed funds rate, when you got other countries raising theirs by 20%, 25%, 30%, which is terrible, by the way. I mean, we never do that. But I mean, we're sitting there sweating 0.5%, for God's sakes. I mean, that's amazing to me. But understand, one of the other hawkish Fed guys already said, Bullard, I think his name is, that he said he will go along with a 25 basis points, you know, 0.25% rate hike this time, but not anymore. He said we got to be at 1% by July and almost at 2%, if not at 2%, by the end of the year. And they've already said, I mean, he said this, Jerome Powell said, they've already given up on the first half of the year. They've already, you know, come to the fact that we're going to see higher inflation for every month. Every report's going to be that way at least through June. I'm like, really? You know, and that's the thing. Think of how wrong these people have been. And this is the Fed. They're supposed to be smart guys. They have, like he said, a lot of economists. But think of how wrong they have been. It's transitory. It won't get above, 4% max at one point in time, I think. And, I mean, are you kidding me? You know, this next one's supposed to be almost 8%. And they're already saying out of his mouth that, yes, the second half of the year is where they're looking for it to peak and then finally start to come down. Can you grasp what that means? Because inflation, and I've said this many times, is the truth, and I'm talking to people about this, and people are starting to really notice this, especially the gas pumps, or when they go out to eat, you know, that this affects poor people and then the lower middle income class folks, the absolute most, because that's the majority of society, right? And like he said, real wages are actually coming down, right? The people at the McDonald's are making more money because they're having to increase to get desperate to get them in there. You know, nurses are making more money, but real wages, he said himself, are decreasing. At the same time, prices are increasing. That is not good, right? And what's going to happen is, just wait and see, is these prices will get to a certain point where even you, if you hadn't done it already, and let me know in the comments if you have, my wife and I have, we've cut out certain things. Just go in general principle. Not that we can't afford to go buy it, but I'm not going to pay twice as much for the same deodorant or twice as much for the same soap. I'll just go get something else that's cheaper. I'm fine with that. I'm just not going to do that. It's not worth twice as much to me. You know, that's just the way it is. I mean, and so there's certain things we've cut out, and that's going to happen. That's where he's talking about, you know, we really got to watch the demand, supply and demand, right? Because the demand, people just say, one, I can't afford it anymore, or two, I just refuse to be ripped off like this. I'm not going to do it. And some of it absolutely is supply line issues. But we've heard on these calls from companies that supply chain issues have started to open up. I mean, I've listened to many earnings calls where they've said that. But they also said in the calls, guess what? We're raising prices more this year. And one thing you got to keep in mind, and this is what he doesn't talk about, and I wish he would, is the fact that if they're telling you, and I think it was Kimberly Clark, I let you listen to that earnings call, and he said they raised prices 5 times in 2021. They're going to raise prices 4 more times in 2022. Well, how do you come up with forward guidance? You bake that in the cake. You got to be able to come up with, this is the revenue we're going to be hitting based on these new prices we're going to be charging. So all these prices, they're already baked in, right? And so that's what people don't understand is like, even if let's say bottlenecks opened up tomorrow, like all the bottlenecks were gone, supply chain was great, Russia left Ukraine, it was peace in the whatever Middle East or Europe, wherever they're at. You know, do you really think that Walmart is just going to say, oh, well, everything's good now, man, we're just going to lower all these prices back to where, you know, pre-pandemic levels, everything's great? No, that's not going to happen. It takes a long time to raise the price on us, to pass on the extra cost, and it takes a long time to get that price down, which if they want to lower it. And trust me, as in Ford and GM, I'll keep using them as an example because they're the only company so far to admit that price gouging was happening in their dealerships, okay? That's going to take a long time. Most likely it's going to take hearings. It's going to take people to be called out for them to actually lower the cost once supply chains are fixed. Okay, just keep that in mind. So this thing is going to drag out. People thought, oh, you'll be at 2% inflation by the year end. I hope they're right. I don't understand on any planet that I'm living on how that's remotely right. I don't know. Maybe I'm wrong again. I can be wrong. I hope I'm wrong. Hope to God I'm wrong. But I'm looking at, you know, past behavior predicts future behavior. They did nothing last year. They didn't do what they were supposed to do, and they were either lying to us or they were inept last year. Like what he said, you were either ignoring the data or you had the wrong data somehow. Right, that's the only 2 things that could have happened there. And so, you know, anyway, you know, the market, you know, expect it to stay volatile. It's the way it's going to be. I think people are just kind of waiting this new to see what the inflation is going to bring, because we know what the rate hike is going to be. We're going to get one. It's going to be just, you know, 25 basis points. No big deal. Shouldn't be. You know, but I think people are really wanting to see this next report and how it's going to affect everything. So hope you guys got something out of it. Leave me in the comments, hit me up what you're thinking and stuff. Sorry for the big rant, kind of got off on a tangent there, but yeah, that guy right there, I got no love for him anymore. So, you know, anyway, hope you guys have a good one. Hit the like and subscribe button if you got anything out of it, and I'll see you tomorrow.